We have a monetary reset every 90 years. We had the start of this US dollar-centered empire, let's say 1944. That's 82 years ago. This empire feels cornered, and the only way out is a military conflict. Silver shortages are guaranteed. It could send silver prices in the hundreds of dollars over the next 5 to 10 years.
Our guest today is Willem Middelkoop. He's the founder of the Commodity Discovery Fund and the author of The Big Reset, War on Gold, and The Financial Endgame. We'll be talking about his views on what is going on in the world right now, what is happening with geopolitics, why are we seeing so many conflicts happening, why is gold at all-time highs, why are stocks at all-time highs despite the economy showing signs of cracking, potentially a sovereign debt crisis in a lot of developing and developed countries. A lot of things are coming together according to what Willem has been predicting for years. And he's written about these themes in his Big Reset book, which I encourage people to check out, link down below. Thank you for coming on the show, Willem. Good to see you.
Great to be back, David. There's so much to cover.
Yeah, we're at a resource conference, but the resource sector is dependent on so many things happening in the world. And that's what really our conversation is about. The macro forces driving this unprecedented level in gold and some other commodities we've seen today. The Big Reset, which is a book you've written, touched on a lot of things that are happening right now. What is happening now that most coincides with what you've been predicting in your book?
I wrote The Big Reset in 2013. That was my first, international book in English on these topics. But in Dutch, I have been writing about this since 2003 to 2004. And always, my thesis was always that one day we would reach the end of this monetary experiment, fiat money only, no longer connected to gold. And somewhere down the line, we would have this huge crisis when people would start doubting central banks, would start doubting that treasuries are the safest investments. And we also would reach the end of the US empire, because if you study monetary history, I've done that quite a bit. Regimes and empires, they come and go on average. We have a monetary reset every 90 years. We had the start of this US dollar-centered empire, let's say 1944. That's 82 years ago. So we're in for a period of change. I was also influenced by reading the book The Fourth Turning by Neil Howe, who's also saying that every 80 years you have this big change. And I came to the conclusion myself in the early 2000s, because I was a real estate investor and I had so many mortgages in the late 1990s, I needed to hedge myself because I was expecting these problems down the road. I was way too early. Yeah. I sold my real estate way too early. Yeah. I sold most of my real estate in the early 2000s. And then started to invest in gold and silver. First the physical part and later in the equities. And then I discovered the junior mining space, and I found out that you have these small companies making big gold discoveries, big silver discoveries, big uranium discoveries. And that intrigued me as a value investor. And that's why I pivoted from being a real estate investor, first turning into a gold investor, and now being a discovery investor. And I built this fund, Commodity Discovery Funds, around 2007, 2008. It was the worst decision of my life, because we started at the top of the last cycle, and now finally everything is starting to break out. Everybody wants to be in gold, so I think we're reaching our finest hour now.
This monetary reset theory, what signs would point to this path towards a monetary reset right now? If you take a look at just the markets, the S&P has been breaching new all-time highs. The NASDAQ has had a great run since 2008. The stock market has made a lot of people who are long very rich. The commodities have made people very rich. If you're long gold, you're making a lot of money. Bitcoin has made a lot of people very rich if they were long. It just doesn't seem like the financial system is breaking if you just look at the markets.
You should look at the core of this financial system. What's the core? This financial system was introduced in Bretton Woods by the US in 1944. They proposed a dollar system, dollar-centered system, not a gold-based system anymore. Keynes had another idea. He was proposing a UK-backed plan to start with a new financial system around a new world currency, the bancor. Keynes lost, UK lost, US won, and the US started to promote the dollar and the US treasuries as the core of this financial system. So if you want to study the stress in this financial system, you should study what's happening with the dollar, what's happening with the treasuries. And in each and every crisis in the last decades, people were fleeing towards the dollar, were fleeing towards treasuries when there was a lot of uncertainty. In April this year, when we had the markets going down fast, it was the very first time that investors weren't fleeing towards bonds and to the dollar. Actually, the dollar is down 13% since the start of the Trump administration. And so it's not so strange to see gold moving up very strongly since early this year, especially since March, April, because gold seems to be the last man standing while we see the first cracks in this dollar-based financial system.
Let's talk about debt in the dollar system. Okay, the Russians were making a mockery of the U.S. debt situation. I'll play a video. It's been circulating on X.
Америка прямо сейчас пытается поменять правила на рынке золота и криптовалют. Вспомните, какой у них долг. 35 триллионов долларов. В общем-то, это два альтернативных валютному сегменту мировых рынка. Действия Вашингтона в этом направлении отчетливо демонстрируют одну из главных американских задач. Они очень хотят решить проблему снижения доверия к доллару. США, как это было и в 30-е, и в 70-е годы, будут решать свои финансовые проблемы за счет всего мира, загоняя всех куда? В криптовалютное облако. Со временем, когда часть госдолга США будет размещена в стейблкоинах, США обесценит этот долг. Еще раз простыми словами, у них сейчас валютный 35-триллионный долг, они его загоняют в крипту, в облако, обесценивают и начинают с нуля. Это для тех, кто очень любит заниматься криптой.
And they were saying, look at the $35 trillion of debt, and now the U.S. wants to issue stable coins to, in their words, devalue this debt. Are they right? Does that make any sense to you?
They made one mistake. It's not 35 trillion debt, it's just 37 already.
Oh, okay.
So
Wow.
it shows how fast the debts go up. And when you understand, people, we always see the US as such a powerful and wealthy country. But look where the wealth came from. There's 37,000 billion of US debt. And how did the US use that debt? Did they build great roads, great cities, great bridges, great high-speed railworks, great airports? No, compared to China, it's a misery. If you drive over this highway, the I-70 here, it's full of potholes. And it's a disaster.
You should come to Canada, Willem.
Okay.
But I understand your point.
But this was the country who owns the world reserve currency could overspend and have huge deficits year on year. And the US has used this money to fight wars, spent so much of this money fighting wars they couldn't win. But these wars were necessary from a US perspective to stay in power, to stay the world's hegemon. And now with China and the BRICS countries opposing the US, opposing the West, I'm afraid the US will find itself cornered financially, and they might seek a military conflict out of this.
Why do you think the DXY is down 13% year to date? Why was there a dollar sell-off? In the past, in the first Trump administration, when there were tariffs, the dollar rose.
I think that many institutional and even sovereign investors see the signs, they see the cracks. Look what central bankers do. Central banks were selling gold up to 2007, 2008. They were net sellers. What happened in 2008? The collapse of Lehman, the great financial crisis. This was a crisis on Wall Street. This was a crisis about the American financial system and American real estate. It spread worldwide. But from that moment on, look at the stats. So the central banks started to add to their gold reserves. They became net buyers. And in the last 3 years, you know the numbers. They've been buying over 1,000 tons a year. So it shows central bankers who are in the business of money printing. What do? They buy gold. So they're doing the same like the gold bugs here. Only the gold bugs started 20 years ago or 15 years ago. But central banks now, don't listen to what they say, just watch what they do.
You've been in the business a long time, you've studied history. What is different now versus, let's say, 10 years ago? Remember post-2011 when the gold price fell from its highs, and then from 2012 to 2019, basically, there was this flat gold price. People gave up on gold. The industry went through a hard time.
Yeah.
Warren Buffett said it's not a productive asset.
Yeah.
Why is there this resurgence right now, this renaissance?
It all started with the collapse of Lehman. That's what my previous answer. That's when central bankers started to stop selling gold, started to add into the gold reserve. But the big change arrived around 2013, 2014, when we had this regime change in Ukraine. And then it became quite obvious for countries like Russia and China that you couldn't trust the US. The US was clearly behind the regime change in Ukraine. US had been preparing for a military conflict in Ukraine for at least the last 10 to 15 years. So Russia started to sell all its treasuries. Then China stopped buying treasuries and started selling treasuries around 2014, 2015. Now most of the foreign countries stopped buying US treasuries. So it kick-started a new revolution in which the, let's say, independent countries, the non-Western countries started to align themselves within the BRICS alliance and started to understand that they need to join forces to be able to withstand American aggression, because America has been successful in creating regime change in dozens of countries since at least the last 50 years. I wrote quite a bit about that. And now all these countries aligned within this BRICS alliance, if you count it, that's 4 or 5 billion people. And the West, if you add it up, it's just 1.5 billion people. The total numbers of the BRICS GDP, it's larger than the Western GDP. So they feel powerful. They have most of the commodities. And now it gets interesting from a commodity investor point of view, that we have this, deglobalization, and suddenly these commodities are becoming a weapon. And the West has decided that we need to decouple from China. We need to build our own mines. But we're totally dependent on China for all of these metals. You know, many of these specialty metals, 80 to 90% comes from China. So we have, let's say, a proxy war, financial economic war. You might even call it the financial economic World War III, in which commodities play a huge part, and especially, of course, gold, because gold is also this monetary asset. There's this fight, and we see this every day in our business. This fight is also on copper. It's also on uranium. It's on all the specialty metals. And this creates a perfect storm for commodity investor, because you have the debasement of currencies, you have higher inflation, you have the geopolitical tensions, where commodities are a weapon now. And then you have the shortages because we don't make enough new discoveries.
Yes. When you say financial World War III, what does that mean?
The Western Alliance, which have been together since the end of the Second World War, is in an open conflict with, let's say, the rest of the world. It's the West against the rest now. I've been talking about that for the last 2 to 3 years.
Yeah.
And this is a war which is not being fought with weapons, military weapons. It's not a kinetic war. It's a war which is being fought with financial weapons, in which we use sanctions and tariffs. And the East is using export limits for certain metals. There's a wonderful book written 10 years ago about, the title is Treasury's War, and it explains how the US Department of Treasury understood 20 years ago that they could use financial weapons, they could use the dollar, they could use SWIFT, the banking system, kick countries out of the banking system and use that as a weapon. And the US has been very successful in making the dollar, turning the dollar into a weapon. And I think the BRICS countries are starting to weaponize gold and are starting to weaponize commodities.
How do you weaponize gold, Willem? I understand weaponizing the dollar, you can just block people from SWIFT, but what does gold mean?
If you buy gold, it's the anti-dollar trade.
Yes.
So if you want to harm the dollar, you stop buying treasuries.
Okay.
You start buying gold.
Yeah.
And Russia and China, they understand very well that the US was able for decades to keep the gold price under control. And when you start to accumulate massive amounts of physical gold and silver, you can break the paper gold and silver trading system.
Well, this supports this chart here. Foreign central banks hold more gold than treasuries for the first time since 1996.
Amazing chart by Tavi Costa of Crescat.
Yeah.
And it shows that what I'm explaining here, you can show it in the chart, it's happening. But this also shows we're in the first innings of this. Yeah, the lines are just crossing. It's like a golden cross.
Yeah.
I think in the next 5 to 10 years, you'll see this play out in a much larger fashion.
The BRICS countries met in China a few weeks ago. China hosted the world's largest Shanghai Cooperation Organization summit. 20 nations convened. The West was not invited, of course. This was a response to the tariffs imposed by the Trump administration. What do you think they're planning, especially behind closed doors? There were many instances when Modi was having a car ride with Putin, for example, and the media was not allowed.
Well, France at a certain stage, I think that was at the previous BRICS conference, France asked if they could be present. They were declined entry. After this conference, which you just mentioned, we had an emergency meeting by BRICS countries where Brazil asked to have an online meeting with their BRICS counterparts to discuss the tariffs, because also Brazil is feeling those 50% tariffs. India is feeling them. And I think Trump made a huge geopolitical mistake by moving India away as a friend of the US, moving them towards China and Russia. And Modi has been pictured with Putin and Xi. So even India, the mood in India is very anti-American now. And the US is almost in despair, and that's why they are creating these drastic, measures like the tariffs. But they are playing with fire because they're sending their friends over to the enemy side. And even in Europe, and we've been aligned with the US so strongly, especially after the Second World War, even in Europe, people start to break away and say, let's talk with the BRICS.
Well, what's happening is countries that may have been friendly with the US, even if they traded with Russia, they're being penalized. India, for example, you brought up India, 50% tariffs because they bought Russian oil.
Yeah, but US they can't keep punishing their friends because they do business with China or Russia, because you won't end up, or you will end up with no friends. This is like the bully on high school, who is once feared but ends up very lonely and depressed.
What is Trump's endgame with dealing with China, do you think?
That's the big question. I don't know. But if you look at the remarks of his Secretary of Defense speaker, Hexat, they're all preparing for a military conflict in somewhere around 2007, 2008. That could be started...
You mean 2027?
Sorry, 2027, 2028.
Okay.
That could start around the Taiwan situation. But as I said in the opening remarks, I'm a bit afraid that this empire feels cornered. And the only way out is a military conflict. And then you can always say, sorry guys, it's the enemy's fault that it all collapsed.
There was a big military parade after the Shanghai Cooperation Organization summit. You saw that on TV. Of course, parades, anyone can put up a parade, but the question is, should the West actually be concerned about the development of the militaries in the East.
Oh, they are. And look what happened in Israel's conflict with Iran, which I see as a proxy conflict between the West and the East. And look how Iran reacted. They sent a barrage of very modern weapons, including these hyperspeed missiles. What's the name?
Missiles,
hypersonic.
Yes.
That's the word. And it made Israel stop the war within days, while they had proclaimed this could take weeks or even months.
Yeah.
And it shows that the West now reached a point that they understand that they are not the ruler of the world anymore. They're not world's policemen anymore.
Yeah.
We have a total new situation in which the balance of power is changing, and a conflict in the South China Sea in Asia will be very hard for the US to win. Look at all the war games that have been exercised and what have leaked out of them, and it's very hard for the US to win such a war.
When we have a bifurcation of the world, like you were talking about, what happens to the monetary system? What happens when the dollar is no longer the global reserve currency?
It's so dangerous. I ended the big reset with my epilogue, and I said we could have two ways towards a monetary reset. When we stay friends with Asia, I wrote this in 2013, so it was still maybe possible that we could have a joint effort to move the system to another phase. But my other option was that there would be a military conflict. And now we're in the military conflict phase, or we're growing towards that. And I think we moved away from having this peace dividends to getting war bills now. And when you don't have the peace dividends like we had in the 90s and the 2000s, which helped the economy in a very positive way, now you have the war bills. That's not very productive money spent. So it increases the debasement of currencies because we need more money to pay for all the new weapons and all the systems we need to build. So it's a drag on the economy, and I think it will make the decline of the current fiat money system even faster. And what do people do? What does the smart money do when they understand that the debasement of currency will only continue? They start to move towards real assets, and that can be gold, that can be real estate, that can be listed stocks. Listed stocks can't be printed by the government. Listed stocks have become a safe haven in the during the Weimar years in Germany. Listed stocks became a safe haven in Zimbabwe, in Venezuela. So it explains why stocks keep going up. It's almost a flight out of paper money. It's a flight out of bonds.
Interesting. So yeah, that's why the bond market hasn't done so well this year. But take a look at what Scott Bessent of the Treasury of the U.S. said, his Treasury Secretary. He said the stablecoins represent a revolution in digital finance. This is in response to the Genius Act passing this year. The dollar now has an internet-native payment rail that is fast, frictionless, and free of middlemen. This groundbreaking technology will buttress the dollar's status as the global reserve currency, expand access to the dollar economy for billions across the globe. They're really betting on the expansion of the stable coins to propel the dollar to the next phase. So this is the counter to what we're talking about.
But it shows the US has to find new ways to find new buyers for the treasuries, because the foreign countries aren't buying the treasuries anymore. So who's the new buyer of the treasuries? Is Tether. Tether is the company who owns the largest stablecoin. They were banned from the US because they never, fully complied with all the rules and laws. But now it's changing, and now Tether has teamed up with Cantor Fitzgerald. You know Cantor Fitzgerald? Cantor Fitzgerald is now part of this administration solving these problems and creating new stablecoins. And they hope they can build these stablecoin markets into a massive market, so there needs to be a massive demand for US treasuries.
How do you feel overall, just sidetracking, about the administration being so involved in the crypto ecosystem? Trump is now, I was reading, the 6th or 7th largest holder of Bitcoins in the world. MicroStrategy is still number 1. And like you brought up Cantor Fitzgerald.
You have a huge conflict of interest.
Howard Lutnick is the father of Brandon Lutnick, who's
taking over Cantor Fitzgerald. Yeah. No, there's a huge conflict of interest. But in every new administration, in every new major change of power in a country, you see the build of a new elite who benefits from the changes, who have friends in the administration. Yes. But it's done quite openly now in the US. But it has been like this with the deep state structures for years. Look at who benefited of all these wars and regime change, the Boeings. So it has always been a small group centered around an administration who became very rich and wealthy by knowing what the administration would do, where the next war would be. Mm-hmm. And we have a new group now who's in power, and they do it more openly. But it's not that big of a change.
Some investors look at this as a leading indicator. They say, well, look at what the government's doing. We should copy them and go into the digital finance space.
You should do. We run a commodity discovery fund. Yeah. But we changed our prospectus. We can add Bitcoin now. We have some Bitcoin because we see where this ship is heading. Yeah. And another example, the CEO of Tether started following me on Twitter. So you see these guys are moving to hard assets. They're moving into mining. Tether has done their first mining deals, pretty big deals. So we need to study this because it is very important for our industry.
What about the critical minerals sector? China, for example, has banned the export of certain critical minerals, for example, antimony, which is used for ammunition. And now the US needs to catch up, like you said earlier. How do you feel about the critical minerals sector?
It gets almost too much publicity because most of these metals are very small markets. Yeah. But I understand why it's on top of mind, because these are sexy minerals and now they come out like a geopolitical weapon. But as an investor, it's quite hard to monetize on this because these are very small markets. But to put this in a broader context, in the first 15 years I've been in this business, we never were contacted by the Dutch State Department. Now we have meetings with them every quarter because they want to understand the world of commodities and specialty metals. They ask our advice. They want to brainstorm with us how even a small country like the Netherlands, who doesn't have any commodities besides natural gas, which we closed down actually, but we don't have any metals or mining. But they want to understand now how even a country like our country, the Netherlands, can start investing in the commodity space. And I advise them, well, just build huge storage capacity in, let's say, Rotterdam Harbor, and store all these specialty metals and even copper and uranium. You could even build an ETF around that and make money. And these discussions we're having now with the official side. And we were invited to go on an official visit to Saudi Arabia in December with Dutch state officials to look for how we can help them to build a mining structure which the West could use and depend on.
Well, some of the stories where the narratives I've heard from miners is that there's going to be a huge deficit in base metals, precisely because of electrification or rearmament by the West. The Europeans, for example, are trying to rearm their militaries. Anyway, there's a lot of reasons for buying base metals, but not enough supply. Is that an argument you buy as an investor?
We've been telling our investors for the last 15 years, we would start to enter an era of shortages. We saw this coming. That's why we spent the last 15 years looking worldwide for the last ounces available in the ground for undeveloped mines. Yes. That's the whole thesis around our fund. But the institutional money was never interested to invest in this because they always said, we can just call China. China will produce enough metals and send it to us for a very reasonable price. That has changed now.
Yes.
So now we no longer can't depend on China from a Western point of view. We feel pressure to start our own mining structure. But that's all too little too late. But it will help us. as investors, because this will send up prices for commodities in demand. And the coming shortages, there are production deficits coming. Even in copper, we have production deficits in silver for years, but production deficits are expected to be in copper next year. We'll have production deficits in uranium for years to come. So I think this new bull market for commodities won't take months like in 2016 or 2020. It will take years, and the bull market in commodities might take decades to unfold. Like we had a bull market in real estate for decades, or we had a bull market in the Dow Jones for decades. And the mood in the world of commodities has been so depressed because values were going down for such a long time since 2008. People think a bull market is a period when prices go up for 5 or 6 months in a row. No, that's not a bull market.
So in the commodity space, which of the commodities we discussed so far, or maybe haven't discussed so far, do you see the most potential?
We concentrate on the monetary metals. That's half of our investments, gold and silver.
Yeah.
Platinum, palladium, but these are very small markets. Then, of course, copper, because copper is almost like a monetary metal as well. It's so important. I think China is storing copper, so copper is such an important metal. Then you have nickel and lithium, which is very important for the whole EV revolution and the batteries. And then, of course, uranium. Uranium is a big one, because that's the only fuel for nuclear reactors. So,
well, in your book, you recommended an allocation of 25% cash, 25% precious metals, 25% real estate, and 25% equities. I know this was written a few years ago. Is that still your preferred allocation?
I changed it just a bit. I said for the 25% cash, you can buy Bitcoin as well. Okay. So cash/Bitcoin.
Interesting how you put that in the same category.
Yeah, because that's the most liquid form of money. And people, especially the gold bugs, we had a gold bug dinner yesterday. Yeah. And still a few of the older guys, they don't want to hear about Bitcoin. But Bitcoin is for me, it's virtual gold. I described it in the Big Reset as virtual gold in 2014. I think everybody starts to see it as digital virtual gold now. And the great thing about Bitcoin is you can trade it 24/7. You can move, you can travel over the world without taking all the weights of gold and silver. So I think it's a modern way you have to be flexible with your own net worth. For people who have some more money, they should diversify and also a bit towards the digital assets, I think.
Going back to gold, where are we in this bull cycle? It's run up a lot very fast. It's scared some investors here at how fast it's moved.
All the people I talked to during this conference, they asked the question, when will the correction start?
Yes.
Has it topped out?
Yes.
That's the common question. And I think people will be surprised by the move to the upside. Well, we're in the late stage of this rise. We need a technical correction at some point, but I think the technical correction will bring us down somewhere north of $3,000, which is not a real dangerous correction from a trend point of view. And I think then we just continue higher. But don't forget, we always look and talk about gold. But after gold started this huge rally, silver started to move as well. This was a delayed reaction. This happens often with the metals. Copper is on the verge of a breakout. Uranium is on the verge of a breakout. So for us, this is not a bull market in gold. It's a bull market in commodities, which just started in the very first innings. And as said, it could take years or even decades.
Silver, you called it the poor man's gold. Many people call it the poor man's gold. Where does silver fit in this monetary reset world?
Silver is the most undervalued asset in all commodity space, in my book. Silver hasn't made any new all-time highs. Silver traded $50 in 1980. In current money, that should be, what is it, $150, $170? Silver is used in the industry for 60-70%. Every year, the industry takes a larger part of the silver production. World silver production is going down.
Yeah.
Shortages in silver are guaranteed. I don't know if it starts next year, next month, or in 5 years, but silver shortages are guaranteed. Silver is a given good, which means when the price goes up, demand rises. And once people understand that silver is getting in a shortage, in a physical shortage phase, the demand from investors will be huge, and it could send silver up to $100 within a week. And I expect silver prices in the hundreds of dollars over the next 5 to 10 years.
Well, the industries using silver wouldn't like that. Wouldn't they replace silver with something else?
What can you use? You can use copper, but you can't use copper for the solar panels. You can use aluminium, which the Chinese are doing for their power lines. But silver is a very special metal, and it's such a small market. The total silver equity market, all the market caps of all the silver companies combined, is less than 15 billion. The total world silver production is around 30 billion. So these are very small markets.
Yeah, the state of war changes demand for commodities a lot. You're a European. I'd like to get your perspective on what's happening in Europe. I mentioned earlier, Germany wants to rearm. The Chancellor wants Germany to have Europe's largest army. In Scandinavia, they're beginning to recruit women now into the army. What is this trend? What's happening?
Oh, when we started in this business, nobody talked about battery metals. Battery metals is only mentioned in the last, let's say, 6, 7, 8 years, because people start to understand how much metals were needed for batteries, and these were very specific metals like copper, nickel, graphite, and lithium. Now people start to talk about the war metals. What are the war metals? That's of course iron, but copper. You need copper. You need very high-grade nickel. We're involved in a high-grade nickel discovery in the US. We're involved in a copper discovery in the US. So I think these Western-based mining companies are making new discoveries here in the US or in the Nordics, in Europe, will benefit greatly, because the Trump administration will cut a lot of the red tape to start opening up and developing these mines. We see that happening already.
Is this a long-term trend, or is this just during the Trump administration? Because
no, this is long-term. This is long-term, because I think...
So you think the Europeans will be less dependent on the US for military support in the long term?
Well, actually, because of Trump, we see a bifurcation between Europe and the US. So this makes the European countries even more convinced we need to build our own weapon systems, because we don't see Trump as a reliable partner anymore.
Here's an extreme view I've heard on my show. I think you may have even seen this interview. The EU will break up at some point, especially since Brussels is imposing very harsh environmental regulations that's basically killing the German auto industry, among other issues. I don't know what you think about this issue.
Well, I've been waiting for years when the German car manufacturers will start to revolt, because Brussels decided by law that you can't build any, non-EV car after 2035.
Yes.
And it always was quite clear to me that the German car industry couldn't survive such a dramatic change. And now they start to openly revolt, and they will say it will kill our industry. And if you know the number of people, I think over 10% of the German people working in the car industry. But for me, the question is, and then we go back to the reset and the worldwide changes I see coming. Who will have the big crisis first? Will it be China? Will it be Russia? Will it be the EU? Will it be the US? But we're all moving towards crisis mode. Look what's happening in the UK. The UK is all alone now after Brexit. The other European countries are not helping them in a financial way. Japan is on its own. That's a mess. I'll be traveling there next month, but from a monetary point of view, that's a mess. And I travel now to Japan because the yen is valued at such a low point. It gets interesting to go there as a tourist. But this is a very dramatic situation, the debasement of currency in Japan. Europe, US, it's a worldwide trend, and soon we might reach the point that we see a new financial crisis, a sovereign financial crisis, a crisis around government bonds, that countries are not able to finance themselves anymore. And that's, if you listen to the Russian and Chinese experts, they just in a wait and see mode. They know they have time on their side because the West is starting to reach the point they can no longer kick the can down the road.
Yeah, tell us about these sovereign debt crisis signs. Okay, I'll just tell you, in school, for example, in business school, right, a long time ago, we were learning that these scenarios were basically impossible. That's why government bond yields are so low, because it's factoring in risk-free. By definition, if it's risk-free, you cannot fail.
No, because the storyline was, these countries can always print more money.
Yeah.
They can always sell their treasuries. They can always have their institutional investors buy their treasuries. But when you reach a point that investors demand a higher interest rate to cover the risk they have on their treasury investments, then things are starting to change. So the interest rates have been coming down since 1980 for over 40 years, and that changed in 2022. Then we ended the downturn of global interest rates, and then a new uptrend started. This uptrend is only 3 years old. And now we see interest rates picking up again in the EU. We see them picking up in Japan. We see them picking up in the US. Mortgage rates are 7% here in the US. You see the first signs of problems with car loan lenders, credit card lenders.
Yeah.
But soon you might have a situation, and the Minister of Finance of France pointed to that France might need IMF help to help them support with their financial budgets. So I'm always on the look for the first warning signs that things start to go wrong. It's not a crisis yet, but it could well be the next crisis, and it could be very severe.
So what happens when the sovereign crisis happens?
Well, then they need to call the IMF and ask for help. And then the IMF will start to use its balance sheet by creating more SDR.
You think there will be a failed treasury auction? People will stop buying?
You only need one. You only will need one to have some kind of financial panic to kick in.
Yeah.
Or sending rates much higher. What happens when rates in developed countries will start to rise to 7, 8, or 9%?
Well, the interest expenses go much higher. But what does that mean for the economy? Right now, the U.S., for example, the interest expenses is over $1 trillion. It's already more than defense spending, I heard.
Yeah.
But what, practically speaking, does that have any impact on the economy?
Well, the U.S. has a deficit of around 2,000 billion. They have to refinance over 9 trillion of treasuries this year. I think the main reason why Trump has started to impose tariffs is he needs to balance his budget. He understands he can't go on like this. So it's not done out of luxury. It's done out of the situation. You understand? You might go broke if you continue. Actually, he has said that in a few statements that the US might go broke. Musk has warned for that as well. So it all points to, well, huge risks on a sovereign level, and that the people in power understand this and start to act on it.
What's going to happen to inflation in the U.S.? What's going to happen to the Federal Reserve monetary policy? Let's talk about the U.S. now. I read today Morgan Stanley revised their Fed forecast. They're expecting 3 rate cuts this year, not just 2. They revised that. But we just got the highest inflation print this year, 2.9%.
I understand why the Federal Reserve is hesitating to lower rates because of the inflation situation. But Trump, of course, pressured the Federal Reserve now so much, and after May 26, we'll have a new president there. So we know Trump will do everything to pressure the Federal Reserve.
Cook.
Yeah, so the signs are clear, and to have an open war between the White House and the Federal Reserve is not helping the dollar, is not helping trust, to bring trust into the financial system. So it all points to all the stress in the system, and you can expect central banks to step in again, to start buying bonds again, to avoid a sovereign crisis. But if central banks start to buy sovereign bonds again, that's a new round of QE. What happens? This is a further debasement of the value of the currency. I think interest rates might start to rise. So it's a very fluid situation, it's a very dangerous situation, and 26 will become very interesting.
What do you think the Fed's going to do?
They will do what Trump wants, lower interest rates. But I'm more interested what they will do on when they will start to buy up treasuries in a big way.
What happens when the Fed lowers interest rates in a rising inflation environment and a slowing economy environment? What happens to markets in that?
Well, you could have lower interest rates on the front end, but you could have higher interest rates on the long end. Yeah. And the long rates might not come down that much. And if that happens, the central banks need to buy lots of treasuries on the long end to bring rates down. But then you're reaching a new super inflationary situation. I don't like to use hyperinflation because that is very rare and almost never happens, but I call it superinflation. What superinflation is rates over 10%, and inflation over 10%. We've seen that after the COVID crisis. We were around 10 to 15% for a short period. I think inflation comes in waves. We've had the first wave after COVID. Central banks worked hard to bring inflation back to 3%. 2% we will not reach, and I'm afraid we'll get a next leg up, bringing inflation back up to maybe double digits again. And that's why the flight out of paper assets into hard assets is starting to become a major trend now.
But maybe that's necessary to save the labor market. There's already a lot of data showing that the labor market is cracking.
Governments are most scared for social chaos.
Yeah.
Social chaos comes after economic crisis and chaos. The Communist Party in China is just like the Trump administration in the US.
Yes.
They want to avoid that people start rioting on the streets.
Yes.
So they will always use the printing press to solve the problems in the short term, creating larger problems in the long term.
I want to finish off in the mining sector. Clearly the mining sector, as you know, has done very well. GDX is up 90% year to date. What questions are you asking the mining executives in this environment today, at this conference, for example?
How they see a solution to stop having this era of shortages in metals. So what are they doing to invest in new exploration, in development of new mines? And it's not enough. Look at the silver production, the gold production, look at the gold reserves over the last 10 years of the major producers. It's all coming down. So we finally reached that point on planet Earth after so many years that we no longer succeed in producing more of the metals we need. And the only way to solve that problem is much higher prices and way more support by governments to really kickstart exploration and building of new mines. And we haven't seen almost any of that.
Mm-hmm. The capital rotation to the GDX this year, where did that come from? Because we didn't see the stock market and other sectors collapse.
Well, when gold breaks out over 2,000 and has this strong run towards 3,000, over 3,000, of course the margins for producers are getting so much better.
Yeah.
And although most American investors aren't investors in the gold miners, you can't ignore these profits. But I look at valuation, the price-earnings ratio for Newmont and Barrick is still 10, 12.
Yeah.
That's not expensive.
Yeah.
And look at the valuation of the mining industry. NVIDIA, one country, is valued higher than all listed commodity companies worldwide, the metal companies. So although we had a nice jump, our fund is up almost 50% year to date, we see nice inflows, but it's just starting. You ain't seen nothing yet because there's so much money which will come out of the bond investors or the high valued high-tech stock investors who will start to see the value in these undervalued commodity plays.
Willem, thank you very much. Where can we find your work? What are you working on these days?
I stay in the process of rewriting the Big Reset, but there's so many moving parts. I haven't decided not to end that work yet, so I will continue working on that. I'll publish that on my Patreon account. People can find me on Twitter, of course, and at our website, where you can also download the Big Reset for free.
Okay, good. We'll put the links down below, so make sure to follow Willem there. Thank you very much for your time.
Nice. Thank you.
I appreciate it. Thank you for watching. Don't forget to like and subscribe. Follow Willem down below.